Bon matin, mon nom est Jean-Marc Lacoste, président de Monarch Gold. I will be doing the presentation in English, of course, and I'll be able, I know you don't do questions, but if you want have question after, I can do it in both language, of course. Monarch Gold, it's fun to be presenting this company right after the speech you got from Claude, because I think that's exactly what we built in the last 7 years. We took the opportunity of probably one of the worst bear market in gold to build a tremendous portfolio on one of the best place in Canada for gold, which is the Cadillac Fault. So basically, when you look at Monarch, you ask yourself, why should I invest in Monarch? Well, our goal is to become 100 to 200,000 ounces a year gold producer, and we have a main focus for that. We have the main asset called Wasamac Gold project that released the feasibility in December 2018. And next week we'll be announcing the launch of the permitting process. Wasamac published a 24% IRR feasibility study a year ago. Just to give you an idea of leverage, we're now sitting at $2,000 gold or close to in Canada, and this IRR is now sitting around 33%. The NPV, same thing, it's at 522 out of the gate when the feasibility came out in December last year. We are sitting at $800 million NPV on the project. Just that project alone, $800 million, doesn't, barely reflect the current $60 million market cap of the company. The feasibility of Wasamac will produce 140,000 ounces a year of gold at a low cost of $550 US per ounce underground. And all this was based on a $1,300 gold in the US. As we know, we're flirting around $1,500 as we speak. We continue adding valuation to the company. So we spent the last 7 years building the portfolio, which I'm going to show you in a minute in a map. But it took us 7 years to go from nothing to one of the biggest land package on the Cadillac break. And I'll show that in a second. But we did that through continuous valuation creation, acquisition, and the latest, which is Fayal deposit. We acquired that this summer. The main reason is very simple. It's an open pitable 6-gram material, 75,000 ounces, and we got the mill right next to it. So why we did that? Because that could easily bring in 50 to 60 million. Sorry. Do we have a technical problem?
I guess so.
Is there a techie in the room?
Yeah, there's two.
So as we wait for the slide to come back, I'll explain because I know my slide by heart. So we bought this pit because this pit itself could generate close to 50 to 60 million dollars of profit in a year and a half. So we already launched a feasibility on that project because it's one of the steps that has to be done in order to advance the project. And we expect to be in full permitting in the spring with permits delivered in 2021. Yep. As long as you restart the 15 minutes, we're good.
We have time, so no issues. We're all right. It's just the connection is.
Okay, perfect. That was quick. We also were able to do a share swap in Unigold. It's a project in Dominican Republic, 2 million ounces. There was an opportunity for us to grab, at that time, close to 15%. We were basically getting a stake in a company at $2 per ounces on the ground. We are drilling on different properties. The Mackenzie, we sold some royalties that we had on other properties. We were able to create a lot of value by making strategic transaction and making sure we stay strong with a solid financial position. We have 8.7 million in the bank. Basically, we have cash, short-term investment, including the position in Unigold. We have 2 working mills, 6 advanced projects. Our major partners are Alamos Gold, Rob McEwen, Hecla Mining, Agnico, Greg Chamandy, past chairman of Richemont, which was close to the story from the beginning. So we offer an attractive valuation of $16 per ounces underground. And this is Canadian dollar. And earlier when Mr. Beget was talking about buying gold or buying good valuation, when he talks about the small cap, what I like to think is You could buy gold at $2,000. You could buy, different mechanism. But when the market's going to go, you want to go and buy it cheap because this is where all the leverage is. So we're trading at a very low discount to some of our peers, probably similar to some of the names he showed in the slide earlier. Wish I would have seen my name there, but that's okay. So the market cap of the company closing in to $60 million. And this is my favorite one. I could spend an hour on this slide, which is not much, but it's a beautiful map of the Cadillac break in Quebec. You go from the right, Val-d'Or City, right there by Louvicourt, all the way to the left to Rouyn-Noranda. And basically, this is a map of one of the most prolific Canadian places to produce gold in the last century. That Cadillac Fall produced 125 million ounces of gold. So in the U.S., we have a say about real estate. Location, location, location. Those are the three things you need. We got one of the biggest land package in one of the best places to find gold in Canada. So this portfolio that you see right now, 7 years ago, we had none of this. So now we have 300 square kilometers in yellow, and in the middle you got two blue squares. What are those? Those are the two last custom milling mills in the region. We bought those over a period of about 3 years at garage sales price because some people were moving on and the market was too harsh, and we were able to grab these assets for nothing. Basically combined probably less than $10 million. If you take those mills today and you try to rebuild, re-permit, and restructure those mills to be productive, it would take you 3 to 5 year minimum, and it would cost you close to $60 million. Guess what? They're fully functional, they're fully permitted, and they're exactly the same price of the market cap of Monarch right now. So basically, if you buy a share of Monarch right now, let's not talk about the ounces, you're just buying the infrastructure for the price where the stock is trading. Now, if you look at ounces, because this is where we're here to talk about, and one last note before I finish on that. One of the mills we finished cleaning last week. What does it mean, clean a mill? You know, the dust, everything that was left for the last 30 years on the mill. We've collected, that was the best mining we ever did in the last 90 days on the Camflo mill. We had 8 guys with a broom, and we got 2,500 ounces, $5 million worth of gold. So you're talking about those two mills that were paid for a cheap price. Not only they were cheap, I'm doing something wrong, obviously.
There's a sensitive.
So we got these two mills for less than 10 million, and we got 5 million out of gold out of it just by cleaning up. Bear with me.
You're just good, and there's a weak spot over here, so. It's not your fault, Jean-Marc.
You mean like if I touch it? I didn't touch it. I did.
I don't know. Maybe it's moving the table or something, but it's as we say, it's a fib. You can see the duct tape, huh? Right?
Yeah.
Yeah. So
I think that like duct tape to fix things.
yeah, I think that's the issue.
Okay, we got it.
Take that off. Excuse me.
Okay, so just to end on the map, we talked about the mills that we bought. We talked about the land package. That is probably one of the best location. If you look at the yellow spot that you see on the screen, the ounces underground under these prime real estate properties, we have a total combined of 4.4 million ounces. And I'm going to break it down. It's 3.2 MNI and 1.1 inferred. So total 4.4 million ounces plus 2 fully functional and permitted mills. That's why I love that map so much. We could start talking about project individually. I can point the project. Everything is available online at our website. We have, description of every one of the categories. The 4.4 million ounces we talked about is all 43-101. It's all been rubber stamped by third-party firms. So we have a portfolio that's really solid. But the mother lode of all the properties that we have sits on the left of your screen right now, and it's called Wasamac Gold. It's a 2.6 million ounces gold deposit, and it's the only multi-million ounces deposit on the Cadillac break at feasibility stage. So a lot of people sometimes talk about properties and exploration, we are at feasibility stage. This is the closest thing you could be right now to production, and that's what you want when the market turns around. So we got 2.6 beautiful ounces ready to be milled at a mill nearby on the main project, Wasamac. Again, what's Wasamac? You could see on the right-hand side, pictures are always good to look at. This is the ore body with the mining plan. You got a 3D generated mill that sits right there by the Trans-Canada Highway, and it's literally 50 meters from the train track. So it's got some of the best infrastructure in the world, so does a lot of projects on the Cadillac Break, but this is why it's so important to be at the right place for this market. High return, 24%. As I said, it sits around 32, 33 as we speak. The NPV, 522 million. It's more like 800 million. The payback, this mine will operate for 11 years minimum, and the payback is 3.6. Those are all great numbers that people want to hear when they talk about a mega project. Low cost, 550 US, all-in sustaining, 630. This is the type of rate you would get on a open pitable mine. This is an underground, very bulk mining on one of the best spots. The capex, 464 million Canadian, probably 350 US. We could shave 230 million or 50% of that amount just by putting on a train and bringing it to Newmont next door in Ontario, or Glencore, or Agnico, Yamana, IAMGOLD, Eldorado. Those are all the big names with big mills that will need the feed. So we have one of the best project feasibility stage where we could save 50% of our capex just by putting the ore on a train, which literally passes 50 meters from the ramp. This is something that you got to keep in the back of your mind. We compare ourselves to the Goldex Agnico Eagle and the Young and Davidson, which concurrently is one of our biggest shareholder, 18%. Monarch Wasamac project has the same stats and sits in a comfortable conservative numbers compared to the two others that are already mining these bulk structure in Quebec and Ontario. This is the railway system. You can zoom in when you go online. It basically shows you Quebec and Ontario, the railway system, which concurrently was built because of the gold rush of the early 1900s. So it's very simple to say that the railroad follows the Cadillac Break all the way to Ontario, and we know this is something very good for us, especially at the rate of 6,000 tons per day that we want to produce. A train can easily take it somewhere else. You wouldn't be able to do the same with trucks that have limited amount of tonnage. This is a longitudinal section of the Wasamac project, give you some ideas of what bulk means. 6.4 grams over 52 meters, 7 grams over 31 meters. Very vast zones of gold. No offense, you don't need a geologist behind the workings all the time. They can give vague instruction. The system is very big, very wide. So that's what we like about this system. This is the life of mine. It gives you an idea of the 11 years, how you could see how the project evolves. Again, this is all something you could see by yourself online. The valuation at 1,500 US, 800 million of value. NPV, the IRR around 31%. These are numbers people like to hear. The rest of the asset, and I mentioned at the beginning, you see some picture, top one, Camflo Mill and Beacon Gold Mill. Camflo is the one that we were able to recuperate 2,500 ounces of dust. Same thing with the Beacon Gold Mill. Look at those mills. I mean, this infrastructure will be worth so much money when this market turns around, because there's no other place on the Cadillac Break where you can go and do custom milling the way we do it. Everything else are the big guys, and they're all full. So all these mines that you hear about coming up in Abitibi, they will knock at our door. They already do for bulk sampling and try to find out what they're going to do. So we have 5 advanced projects other than Wasamac. The Quannar Gold, it's a fully permitted mine, ready to go. We need 30 million. Looking for partnership. Fayal, I mentioned the pit. Mackenzie, we're drilling. We'll have results next week, testing high-grade gold below. Swanson, open pittable resource. And finally, Beaufort, which is something we didn't talk about, which is very important, which is a fully operating mine, ready to go. We could bring an ounce to the mill within weeks. We put it on care and maintenance in June, just before the rally in gold. We had a few repairs and a few things to do, including cleaning up the mill. Quanard Gold, which is a secondary project of ours. Have a look. It's online. It's available. Beaufort Mine, that's the one that's been producing more than 1.2 million ounces over the last 25 years. It's still sitting at 800 meters, which is nothing in the region. We go down to 3.2 kilometers in Abitibi on some of the mines. And finally, but not least, the corporate structure of the company. We got 260 million shares outstanding. We trade at, like I said, $16, $18 per shares per ounces underground. Our biggest shareholder, Alamos Gold. Most of the Quebec funds are in, pension fund, government. They're a big shareholder. We got Agnico, of course, ECLA, and Rob McEwen and Chemendi, who came in together as partners to help Monarch spread its wings. And the rest are annexes that are available on the presentation. You can grab some at my desk. Again, you can download it on the website. But it gives you a better understanding of where we sit compared to our peers. And like Claude said earlier, I think this is one of the company you want to look for in the coming bull market, because this is probably one of the one that will be flying way up when the market turns. Thank you so much. Sorry about the technical difficulties.
Well, I'm sorry about that, Jean-Marc.